Hello, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys, welcome back to another week in the crypto market. Bitcoin is finally over $80,000. We potentially have the end of the war on our horizon, TBD. Some other fun news for the week is Western Union officially launched their USDPT stable token on Solana. Payword, who is the parent company of Kraken, they acquired a crypto derivatives platform called Bitnomial. And just yesterday, Coinbase announced that they are laying off 14% of their staff as they look to replace some functions with AI. Pretty on trend for the broader market then. But we, as always, have tokens to discuss, so I will pull them right up for you here. So first, I'm actually going to talk about this project called HoudiniSwap. So on Monday, Sol Strategies, which is a public digital asset treasury company, DAT for short, announced that they are going to buy this cross-chain swap aggregator called HoudiniSwap. So HoudiniSwap is a non-custodial swap product, but the idea is that instead of if you need to take your, your assets that are on Solana and you need to take them to Arbitrum, normally you would have to go like Solana, transfer that to ETH, then go ETH to Arbitrum. And there's all these things that happen in between, a lot of bridging, there's fees. But say you want to go from ETH on or Solana on Sol to USDC on Arbitrum. That's a whole other thing. So you can make all those swap. The Houdini essentially offers like a quick way to route those orders really fast. It offers private user privacy as well when constructing those cross-chain swaps. So you can't be front run, which again, very great feature. So Sol Strategies is set to purchase the aggregator for about $14 million, supposedly after it generated reportedly after they generated $13 million in revenue last year. However, HoudiniSwap does have their own token called Lock. The Lock token previously operated under a buyback and burn model, but this feature was just quietly discontinued over the past few weeks. So the acquisition does not include a purchase or buyout of the Lock token, and that currently has a valuation of $295,000. So clearly it has been abandoned as an investment vehicle for many. So HoudiniSwap kind of just joins this latest example of projects selling out under acquisitions and then not really including their tokens. So we've seen this a lot with a lot of these dual project, where they have equity tokens, a foundation. We've seen this in a few cases, most notably Axelar, Tensor, and there are some other examples as well that we are seeing more and more in the last several weeks. So it's really unfortunate leaving token holders out in the cold. The Lock token, it is down unsurprisingly 58% for the week. All right, next up, I'm going to talk about MegaETH. So MegaETH is MegaETH last Thursday. They are this layer 2 protocol. They finally had their token launch. They've had their mainnet live for a little while, and they've been one of these really promising up and coming projects. So they're a layer 2 on Ethereum. They have, they supposedly, they have had some unique tactics for their token release, which is why it's taken so long. The token itself is basically unlocked based on network meeting certain milestones, such as DAU numbers, TVL, versus other projects which use time-based unlock schedules. So the model really aims to just better align activity and usage with token emissions, something we really haven't seen before. Some of the benchmarks that they're looking to include total value locked TVL, circulating supply of their stablecoin USDM. Again, the token also has more utility than most L2 tokens. Not only do they just act as a, buyback, or they use the gas and staking model that most, layer 1, layer 2 tokens use, but they also have a buyback ecosystem based on ecosystem revenue. So really trying to kind of get people to hold the token. It's not just being given out for free, but also really, thinking about that long-term longevity for the project. So the Mega token also, the team is also positioning MegaETH as a consumer-facing chain. So we've seen this a lot. I don't know if anyone's really cracked the code on getting a lot of consumers into crypto, but we're working on it. So they offer, quick, low-cost transactions, trying to encourage that like consumer-y database or that's consumer user base to come in. So as of today, though, the chain has been doing not bad. It's got about 900 million in TVL, up from 100 million before the token launch, which is a pretty impressive growth increase. The token itself came out around where it was kind of trading in pre-market prices, but has since gone down 24%, not unusual to see on new token issuances. All right. So talking about Hyperliquid, so they're one of the largest decentralized derivatives exchanges. I've talked about them a ton in the past. They're probably one of the largest revenue generating projects in crypto right now as well. They launched a new feature this week called outcome markets. So what are outcome markets? So this feature is called HIP4 outcome markets, but it's basically the same contracts that prediction markets use, which obviously prediction markets have been all over the news. The idea being you can bet on the outcome of anything, not just kind of sports gambling, but you can bet on, political outcomes, what tie will somebody wear at their press conference, like all kinds of random things. So, you can bet on the price also of, will Bitcoin be up or down by this amount on this time frame. So, the contracts don't use liquidations and leverage. So unlike perpetual futures contracts, they don't include like a lot of the kind of complexity that the other contracts on Hyperliquid include. So to start though, these markets are just going to be permissioned. They eventually could be open to a wider group as well. But right now these are just being deployed internally. So they've had a few markets go live. To start these so everyone these days does seem to be getting into the prediction market game. You're not kind of, imagining it. I feel like I see new prediction market, projects pivoting to prediction markets every few days. But in this case, in the case of Hyperliquid, they're not really looking to compete with the behemoths, Polymarket, Kalshi, but they are looking instead to have like optionality within the ecosystem for these outcome markets. So the idea being that like people aren't leaving Hyperliquid if they want to make a bet on more of an outcome market. So really it's that ecosystem lock-in effect. The fee structure is also indicative of this. You can see like the front end accessing these markets is only going to cost 4 to 7 basis points versus like typically you'd see 50 to 100 basis points charged for external venue access. So to date, these new markets have seen about 24 million in notional volume since launching on Saturday. Not bad. And the Hyperliquid token, it is up a cool 9% for the week. All right, last up, I'm going to talk about Centrifuge. So yesterday, Coinbase announced that Centrifuge would become its RWA tokenization partner for its base blockchain, which is currently a layer 2 on Ethereum. So Coinbase obviously is such a large presence in the space. It's a big deal for Centrifuge. Along with the partnership, Coinbase also invested in Centrifuge at an undisclosed valuation. This isn't the first time the two have worked together. Coinbase previously invested in Centrifuge's 2022 and 2024 fundraising rounds. So this is kind of just adding on to that investment and deepening those ties for them. As part of the partnership, Centrifuge is going to be focusing on bringing products like ETFs, credit funds, and other structured products on chain and tradable on the base blockchain. To date, if you haven't followed Centrifuge, they've got a bunch of tokenized funds, mostly on Ethereum, Avalanche, Plume, and a few other EVM compatible networks. But they impressively have gathered $1.6 billion in AUM in these products, all representations of traditional products that exist in real life. And they also have DeFi wrappers for each of them too. So some cool things that they're doing. The market clearly likes this announcement. They're up 24% for the week. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. I'm going to be off the next 2 weeks, but in 2 weeks, we will be back with another episode of What's Driving Token Prices here on May 27th.